Welcome to the Macro Minutes Financial Show here on YouTube. My name's John. I'm the strategy manager, and I'm here with the IT administrator, Chadwick. How you doing today?
Hey, I'm doing great. It's nice to be here. Nice to be talking about some trading strategies and all the things that go with that.
Man, it was a wild week this week in the stock market. We had a lot of movement, so we're going to jump right into the charts here and go over the main macro movers here this week. So starting with the S&P 500, and we're just going to view the futures as our reference. The S&P 500 as of 11/18/2025 closed the day around 6,626. Now we're down about 4.5% from the all-time highs at the moment. The current trend and trade levels that we're looking at here, if ES breaks below the 6309 would be the first level that we'd be looking at here on the S&P 500, and the 63 level is some key levels on the S&P 500 that we're looking for this week. And if you look at the chart, you can really see since April, where we had the tariff news that Trump came out with, we've really been on a bull market run here, very, very sharp and to the right, top right corner of the charts. But we still have a way to go before we break any type of trade or trend level on the ES. I know the whole market is looking at the S&P 500 right now, so that's definitely some key levels of that. We're going to switch over to the NASDAQ. We're at 24,578 on the NASDAQ as it trades here in overnight hours. The key trend levels, the trading trend levels for this to look out for, to put on your sheets, is 23,000 flat and 21,670. Now, if we start to break these levels, that is key levels when you're going to look for managing your positions a little early there. If you switch over to crude oil, there's a lot of geopolitical things happening in crude oil. We're not going to dive too much into that today, but crude oil sitting around $60.35 a share. The first level that crude would have to get up to before its bullish trend would be $64.63. It's still very far away from that. And then our main trend line would be closer to $72. So I don't look for trend to be a buy anytime soon here. Honestly, I look for volatility to continue here in this market. If you keep on moving to gold, now gold has had a massive run here. It went all the way up to around $4,300 an ounce for gold, which is a crazy price for gold, an ounce.
Yeah, that's wild.
It is wild for sure. You're looking at your key the current price right now is $4,063 as I'm quoting the overnight market in GC for your futures. It came off of that all-time high, but this thing has been just up and to the right of the chart, going crazy. The key levels for gold, now we would have to drop significantly to hit these. Your first one is at 3,485. Your second one is much lower at 2,876. If you've been in gold, this has made you a lot of money in the last, if you look just since the beginning of the year, for reference, gold has if you go year to date, gold was down there around the 2,700 range, and now it's at 4,000. So if you had $2,700, it'd now be worth $4,000, which would have been a huge gain in gold. Looking at the silver market, let's check out what silver has done. Silver is around $50.50 an ounce itself, and it's had a crazy run as well. If you had at the beginning of the year about $30 in silver, is now worth $50.50 for silver per ounce. Key levels for silver, it would have to drop drastically all the way down to $40 before we'd get worried about that trend, and even further down to $33 before we would completely exit our positions. And now going on to the one that everyone's talking about. A lot of people have been talking about Bitcoin has been accepted by the institutional level investors. And Bitcoin had started off kind of shaky at the beginning of the year, but it had a really nice run. It went all the way up to $125,000 a coin.
That is wild.
For Bitcoin. Yeah, it's a massive run. I remember when Bitcoin was still around the $3,000 mark, and now it's $103,000. So if you had $3,000 back in, I'm gonna say back in like 2017 or so, maybe 18, that'd be worth over $100,000 today.
Yeah,
so that's a major mark. Now the first level. Well, first, Bitcoin is at 92,000 right now at the moment. Its trend line is up there at 103,700. So it's already broke the first level. And its second level is at 99,000. So Bitcoin heading down significantly as we go into the next segment of our show here.
All right. Very good information there. I like looking at the charts. Really puts the rubber to the road.
Now this is a S&P 500 total replacement strategy. So if you are invested in the S&P 500 and you want to totally replace that, you can get our trade signals.
Hold on. So you're telling me that for $5 a month, I can link my very own brokerage account to your strategy and have it automated to make all the trades for me, and I don't have to do anything?
Yes, so if you want just the signals, it's $5 a month. If you want it automated in your account, then it's extra $55 a month to have that automated for the first 3 months.
Okay.
So it's a really good deal right now. We just launched this in November the 2nd. Yeah, it's a really good deal.
Let's look back at it.
We launched it November the 2nd. Now, this is going to track the S&P 500 very closely. As you can see on the chart, the dashed line is the S&P 500 and the green line is our strategy. Both are down around 5% right now, but what we look to do is keep an eye on these trend levels, and if the S&P breaks trend like it did in COVID and it goes down 33%, we're going to try, like the whole purpose of this is to reduce the drawdowns but still have the same return as the S&P 500. Now you are going to still see your typical pullbacks from all-time highs. So you're still going to lose like 5, 6, 7%. But as the time goes on, and say we have another big announcement, world announcement, something crazy happened like COVID or the 2008 financial crisis, we're going to protect our capital so we don't have these large drawdowns. That's what we're really worried about. So if the S&P 500 is something that you are invested in, this is a total replacement that looks to reduce your risk, your volatility of the downside, and still capitalize on that upside.
All right, well, that sounds fantastic.
Absolutely.
I mean, I'm not sure what else you're out here looking for, to be honest with you. So
yeah, it's a good strategy. Look that up. We'll have a link in the description below. Yeah, and we're just going to move on over to our educational corner.
Okay, it's one of my favorite parts of the episode.
Yeah, and we're just going to kind of give you guys a way we think about markets and some of the most important things that you may not hear everywhere else. And we're just going to start from the beginning. And if you think of any questions that you can think of a new investor might not know or understand, Chadwick's going to ask those questions just here off the fly. And we're going to see if we can do a really good educational corner here that is a good takeaway without going too far with it.
Okay.
We don't want to kill you guys with just a ton of information. If I get going, stop me, because I love to talk about this stuff. So you have to rein me in sometimes. But today we're going to talk about liquidity. Now, when you hear liquidity, it kind of sounds like, I don't know, what's the first thing that comes to mind when you hear the word liquidity?
Well, I mean, I think liquidation,
Right.
like to reduce something.
In the financial markets, liquidity is so important. And if you take something, and let's talk about in our day-to-day life for a minute. Let's say you were going to buy something as an investment, and Chadwick and I both are musicians, so say it's a bass guitar, for example. You were going to buy this bass, and the only reason you're buying this bass is because you wanted to sell it, right? And say it's a specific year, model, something that you have to be an expert in the field to really know about this bass, right? Now, because it's a bass guitar, and say it's got certain features that most people don't know about, like say it's a early model J bass from Fender, one of the first ones they ever made, right?
Yeah.
So
Low serial number.
Yeah, low serial number, maybe the first, second, third one. And so automatically you're narrowing the people that you can sell it to musicians, and then even further people that are interested in bass, and then even further people that know Fender's history. And we're not trying to go too far into depth here on the specific item that we're trying to sell, but if you buy that and say on paper, meaning like the last one that someone bought and sold was worth like 10 grand, right? And you have an opportunity to buy this bass guitar for 5 grand, and you would say, oh, well, I could make $5,000 on this. Or say it's a car. Say there's a very specific year car, like a 1983 Aero Coupe Monte Carlo or something. I'm not sure if I got the exact year right, but say you have something specific that's worth a lot of money that on paper that people that are in this industry would buy this thing. Okay, well, if you buy it, but there's only one other guy on the other side of the world that you can sell it to, it's not very liquid. Meaning, if you buy this, it might be hard to sell it to realize your profit, even though that one has sold for $10,000 and you would have made 5. So like, say you can buy it for 5 and the last one sold, or people buy these for 10, but there's only a few people in the world to buy it, it's going to be hard to sell it, even though you should theoretically make 5 grand. So it's like not very liquid. Whereas if you take something like gasoline to put in your car, you can go on any corner and buy gasoline, and on any corner someone's selling gasoline. So there's a bunch of buyers and there's a bunch of sellers. That's when something is very liquid. We call it liquid for short, but liquidity is having a lot of buyers and sellers in a marketplace so you can easily realize your profit or loss, versus something that's illiquid where there might only be a handful of people that want that thing.
Okay, I think that's a pretty good explanation. Yeah, I guess my thought when you said liquid, like I said, first thing I thought was liquidate. So
right, and that's actually what you're doing. So like if you have, say you have stock of like a store is liquidating, like you're saying, they're selling. So basically liquidating, you can think of that as like getting rid of everything, or you liquidate. That is part of the term, but liquidity specifically is not that you're like going out of business and liquidating. It's just that there's a lot of buyers and sellers.
Right. It's the availability to buy and sell a certain item.
Exactly. Perfect. That's the perfect definition right there. So, yeah, I think that's pretty easy. Pretty easy one to start with.
Yeah, I think so too. I was trying to think of some great questions, but yeah, you explained it so well that left no room for questions, really. So good job.
Well, and I think you've done a good job wrapping it up with the little one-liner there. So just going to give a quick overview of the last week. Feeling some impact from the government shutdown because people didn't have the money they normally have to spend, whether they worked in the government or they got some kind of government benefits. So some people were saying, like, okay, we'll see a sell-off after it comes back open because of the reports. But then some people said, well, this is going to be less money going around in the system for the economy, and we would see it earlier. What ended up actually happening was the economy was strong until the government reopened, and then we did see a sell-off, but we really haven't had those reports yet. So it's just kind of interesting what people were thinking was going to happen versus what ended up happening. And the Fed right now is they've been cutting rates. So I know, like, if you have a mortgage or something, you've been seeing the opportunity to refinance. Those letters are going to start going out. We've had a couple rate cuts now.
I've been seeing those.
Yeah, so you'll start seeing those things. Interest rates are going down right now, and that is something I was going to talk about as well. Is the 2-year yield is currently at 3.57 on the 2-year yield, and the 10-year yield is at 4.13%. So basically, what these are for people that don't know is if you put your money in like a savings account or high interest CD or something like that, that's where you can gauge about what you can get. Now, right now, if you lock up your money for about a year, you can get about a 3.8% interest rate on your money right now in the bank, risk-free, not taking any risk. So if you're going to take risk, you want to have a bigger return than 3.5%. And but right now the curve, the interest rate curve, is not inverted anymore. It's sloped the right way. So we've been seeing interest rate moves, and once the Fed starts cutting, they usually continue to cut. But with that, we're going to go to our last segment, and it's the joke of the week. What do you got for us, Chadwick?
All right, listen. My portfolio is starting to act a lot like my gym membership. I pay every single month. I'm not seeing any returns.
And that could not be any more true than this week. Currently down about 5% from the top.
Right.
So we're even losing a little bit of money.
Well,
So
yeah, you got to lose to make it, though. So
that's it.
Stick with it.
Stick with it. And with that, we're going to wrap up our first episode of the Macro Minutes
All right.
financial show here on the Samaritan YouTube channel. I've been John.
I'm Chadwick.
And we'll see you next week.
All right.